It's nap time quite yet.
Okay, we're live.
Thank you all for attending this presentation on useful accounting tips for small businesses, ways to increase your profit and save tax. I'm Shoaib Shafiq of Integrity Accountancy Services. I'm a Chartered Management Accountant with 20 years accountancy experience. We specialise in a small in offering accountancy, consultancy and compliance services for small businesses based in Hall Green in South Birmingham. Our web address is www.integrityaccountancy.com. Phone number is 0121 777 5361, and please feel free to tweet us at integaccount. This presentation is going to look at various ways a businesses can improve their profits and help them save tax. One thing that's quite an important thing is the structure of your business. Understanding the benefits of between sole trader and a partnership. Sole traders are in effect they are the business, so there's no legal separation between them and the business. The requirements as a sole trader is that you register with HMRC within 3 months of commencing trade. There's no need to register with Companies House, and there's no registration fees involved with that. As a sole trader, you are required to complete a self-assessment tax return every year, pay income tax and pay national insurance once you reach 3 months of operation. The main benefits for being a sole trader is that in effect all the business profits are yours. It's quite easy to do the accounting for a sole trader. There's no need to file anything with Companies House. Also the details of the business are more private than they are if you're a limited company. And another benefit is that it's quite easy to change to a limited company in the future. The main disadvantages of a sole trader is there is in effect a higher personal financial risk. That is, if your business owes money to creditors, then your own personal assets are then at risk. So that's your home, that's your car, that's your television in effect. Another disadvantage of being a sole trader is that it's harder to sell your business because there is less separation between you and your business. So by a business being harder to sell, the value of the business goes down. So that's something that people, if they're looking to eventually exit their business and sell their business on, it's worth maybe thinking whether a sole trader is a suitable structure for them. Another thing is that there's slightly less credibility. There's less details out there in the public domain about you and your business, so it's harder for people to find information out about your business. The other common way for people to trade in business is as a limited company. So this is where your business is a separate legal entity to yourself as the shareholder or the director of the business. If you're a limited company, you need to register the business with Companies House and let HMRC know that the company is in business. As a director of a limited company, again, you need to complete a self-assessment tax return, pay your national insurance and income tax with PAYE or the self-assessment tax return. And also, as well, you need to file annual accounts for your business and a corporation tax return for your business as well on an annual basis. There's a lot of myths about limited companies, and I'm just going to try and put those to bed a little bit. There are ways of avoiding tax if you're a limited company. No, if you are profitable, you have to pay tax, very simply. However, there's much more tax planning available for limited companies than there are for sole traders. So you can in fact reduce your tax liability significantly as a limited company. Your accounts need to be prepared by a qualified accountant. It's not true. For a limited company, your accounts just need to be prepared by a competent person, and that is whatever you define it to be. All limited companies did an audit. Again, not true at all. Only businesses that are kind of over. There's the 3 criteria. And that is the asset value of the business, the number of employees, and the turnover of the business. The turnover needs to be over £10 million. So now there's increasingly there's a lot more small businesses or limited companies, and they don't need an audit, which can be expensive. You're more likely to have a HMRC inquiry if you're limited. Again, not true at all. There's no differentiating between whether you're a sole trader, a partnership, or a limited company, whether you're going to get a HMRC inquiry. My company is too small to be limited. Again, not true. There's no lower size limit for a company to be a limited company. You have to register for VAT and as an employer if you're limited. Again, not correct. Both VAT and both registering for VAT and registering as an employer have no. It doesn't matter whether your business is a partnership, a sole trader, limited company, or PLC. The directors have to be shareholders, and the shareholders have to be directors. Not true. You can have directors of limited companies that have no shareholding in the business. You can have shareholders that play no role in the active direction of the business in the long term. The money, one of the most common misconceptions is that people feel that the money for their limited company in the bank account belongs to them as the owner of the business. Not true. That money needs to be extracted from the business. So it is either extracted by salary or dividend as the owner of a business. That money doesn't belong to you. The limited company is a separate legal entity to you. So that money needs to be taken out, and there's only two ways to take it out, either by salary or dividend in effect. And also, information is public and everyone will know where I work and live. There is much more public information available about limited companies than there are sole traders, but it's quite easy to declare a separate registered office address for your business, and that's completely legitimate to do so. It's probably easier to look at the disadvantages of being a limited company before we look at the advantages. Firstly, there's more administration for a limited company. So you have more filings to do with Companies House, you've got and also filings to do with HMRC. That administration in effect does lead to additional costs, and it'll be typically your accountant that would pay. That would is where the additional costs would come for, because there's more reporting required. So as a general rule, for small to medium sized companies, you'll pay maybe between £400 and £600 more for your accounts if you're a sole trader or if you're a limited company, just as a general guide. Also, the directors have obligations under the Companies Act from 2006, and it's important directors of limited companies take their obligations seriously, because that is a criminal offence in effect not to do so. There's another rule where people had previously set up limited companies where they were working on their own and in effect were contractors, so but they were in effect employees of businesses, and they found it much more tax efficient to declare their business, take their income as a limited company. So it's important people, where they are an employee, don't try and operate through a limited company, because HMRC are clamping down on that, and it's not a sustainable way for people to operate their employment. However, there's many advantages for being a limited company. Credibility is much more easier to find information publicly about a limited company than it is sole traders or partnerships. So that makes it easier for people to check your business and check how how long it's been established, who the directors are, where your trading addresses are, etc., and what you do. How am I doing for time? Are we doing okay?
Doing okay.
Another one of the key advantages for limited companies is there's generally a higher take-home pay for limited companies than there is for sole traders. The other main advantage is that there's a lower personal risk. Your limited company is a separate legal entity to you and yourself. So if your limited company can't pay its debts, you yourself as the owner of that business are not then liable for that. It is a limited company, and the assets that belong to the limited company that can in effect be repossessed. So you've then got that separation between your home, your car, your golf clubs, your TV, etc., and somebody can't repossess those unless you go and sign personal guarantees, which is a common misconception. People are signing up to agreements now with lenders and they are personally guaranteeing things, and what's happening is in effect they're losing one of the main benefits of a limited company, which is having that separation between themselves and their business. Other things, another benefit is tax planning. There's much more tax planning available for limited companies than there are for sole traders and partnerships. Primarily, setting the company up as an enterprise investment scheme. Enterprise investment schemes are really attractive for investors, attracting big investors into smaller businesses, because the investors get enhanced tax reliefs. Also, doing research and development, R&D tax credits are available. So if you're doing research and development to find out something that's not publicly available, although other people may be doing it, but that knowledge isn't out in the public domain, there's enhanced tax reliefs for businesses available, and that can lead to significant savings on your corporation tax bill. And the other main benefit is it's much easier to sell your business, and by business being easier to sell, it generates a higher value. So because again the limited company is a separate legal entity to yourself as the owner of the business, it's easier to sell it. It's nice and packaged up, so when it comes to selling your business, it's much easier to achieve a higher sale price. The next graph just shows the tax efficiencies with limited companies, and you'll see that up till about 16,000, the take-home pay is relatively similar. The red and the blue line are quite close, but after 16,000 you can see the gap between those two lines steadily increasing, which is where there's more take-home pay for a one-person director of a limited company than it is if that person operates as a sole trader. There's a number of other types of business structures available out there. I'm going to run through these very quickly. So partnerships and limited liability partnerships. Those are in effect an extension of being a sole trader. So that's where again there's no limited liability, except that there is with limited liability partnerships, but with partnerships you still have the same types of filing as a sole trader. There's also now community interest companies, which is the way of setting up a company that operates and services a particular community. For businesses that may look to become charities, so for community interest companies that may look to become charities, that tends to be a good way to start, because it's a good way to get your house in order and start operating with that charitable mentality. There's also unincorporated associations and public limited companies. Public limited companies are your larger publicly floated companies, so that may be in the alternative investment market, the AIMS market, or the stock markets, and that's where in effect you will sell shares of your business. For small businesses, one of the key obligations is that you need to be on top of your business records, and HMRC at any time can review your business records, and businesses can face up to £3,000 in fines if their business records are not maintained in good order. There's three simple ways of maintaining your business records. You can do it yourself, just do a bit of training. There's plenty of online training videos available. Maintain a spreadsheet and just be on top of it. Do it regularly, do it monthly at least. Another thing is appoint an accountant or a bookkeeper. Alternatively, there's now online bookkeeping software such as Xero or QuickBooks that are nice and easy to use. Again, lots of resources online. The information automatically feeds in from your bank account. It makes bookkeeping much quicker to do, much simpler, and actually it's more fun to do now because the reporting's there. You can see your profitability really quick and easily, so it gives you that bit of control, and there's always good advantages in doing the bookkeeping yourself, so you're on top of your business and you're more aware of the costs that you're going to be facing. I want to run through the advantages of online accounting software. Firstly, the cost saving is quite important. A lot of the online accounting software, you will operate that through a web browser. So if you've got access to the internet, you've got access to your accounting details. So therefore, there's no need to buy any software, and there's no need to buy any additional hardware. Also, it's bookkeeping so much easier as well. You can set up rules so that if there's a payment to a particular supplier, it automatically goes to that supplier. Every time it happens out your bank account, it makes it very quick and easy. You can view your account in the cloud, so any browser, any PC, mobile phone, tablet that has internet connection, you can very quickly have a look at your account details, see what's happening with your bank account. It also gives you a real-time view of your business, which is really, which is always a good thing to have for any business. A lot of businesses get sucked up into operating the business, selling, offering a service, and they don't take a step back and actually spend time focusing on their business, which is an important thing. We say to clients, at least half a day a month, 1 day a month, 1.5 days, 2 days a month, spend time just looking at your business. Have I sold enough? Have I got enough money to pay my bills next month? Am I reaching my targets? All the online accounting software allows you to produce invoices really easily, and those automatically feed into your accounting software. So that makes it much smoother, gives you a nice professional image to your invoice and the documentation you're producing. There's a time saving as well with as opposed to using spreadsheets, because these are intelligent software and they will learn particular descriptions relate to particular costs. Also, it allows your accountant to get real-time access to that information, because it's web browser based. You can be doing something, you can contact your accountant saying, right, I think I've got a problem, or I'm not sure how to do this, and your accountant can log on the same time as you and talk you through it really quickly and easily. Also, there's free software updates as well. Another, us at Integrity Accountancy, if you sign up with us, we give you that online accounting software for free, because we appreciate the value of, firstly, you being on top of your bookkeeping records, and also the fact that we can get real-time access to that information. It enables us to advise you better as well. For those of you who have just started out in business, I've just written down a few basic tips, which if you do these, they will stand you in good stead in the long term. Firstly, always get a business bank account and use it for business only. Don't dip in and use it for your own expenditure. Use it for business. Try and put as much as you can, as much of your business income and expenditure through that business, that bank account as possible, because then that in effect almost creates a profit figure. That balance then is in effect telling you how profitable you are. So and try and be strong with that. Another really good business practice is to do a business plan and prepare a cash flow forecast. So sit down, decide who you're going to sell to, what you're going to sell, what makes you different to everybody else out there doing similar to you, how you're going to source your materials, where you're going to have a look, see where you're going to get pinch points in your cash flow, and start thinking about how you're going to work your way around that, whether it's getting an overdraft or whether it's putting some money into your business personally that you might want to extract, you might then want to take back out later. Always be humble. Very few business people became great business people overnight on their own. They find good business people that you can talk to, people that you can trust, and people that you can talk to openly and utilize them. People. When I started out in business, I took a lot of people out for lunch, and I would go and take them out for lunch, and I'd pay for their meal and pay for their drinks, and it might cost me £40, but that 2 hours with that person was invaluable, and it really stood me in good stead. And these people I've built ongoing friendships with, that we now cross-refer business as well. The other thing as well, everyone, when they set up in business, they have a definite idea, I'm going to do this. But when you're starting out, you need to be a little bit adaptable. You need to appreciate that, right, this is what I want to do for my business, but that's going to take a while for my reputation to get out there, or knowledge of my products and materials to get out there. So you have to be a little bit adaptable, and if you see opportunities to add additional services or do something slightly different, you have to embrace those opportunities and be prepared to change a little bit. Networking as well. Build up good networks, go out there, promote your business, meet good people, maintain those links. And also, another thing I learned very quickly is that you can get a lot of things for £5. There's a website called, and I have no affiliation to this website whatsoever, I just like it. It's called fiverr.co.uk. That's Fiverr with 2 R's on the end. And they will do a lot of services for £5 or $5. So that's maybe get some artwork produced, get some social marketing done for you. It's very cost effective, and there's a lot of people out there, a lot of bright people out there in Asia in particular, that use this website that operate their services, and it's a really easy resource just to tap into. This is the bit of the presentation that most people enjoy the most: how to save tax. So the first thing I will always say is a limited company is a really quick, easy way to save tax. Obviously, if you're making less than 16k a year profit, is it worth taking on those additional costs for the accounting needs? But if you are, it's kind of worth doing that. Another thing that a lot of people tend not to do is claim the business mileage. If you're doing business miles, you're eligible to pay yourself 45p per mile up to 10,000 miles. I'm just going to check how we're doing for time. We've got
a couple more minutes.
So I'm going to keep going. Also, if you work from home, or you're doing a work from home and you have a designated space in your workplace that you use solely for business, in your home that you use solely for business, you can then claim some of those costs that you incur for running a home against your business. Make contributions to a pension scheme. Pension scheme contributions are fully tax deductible in effect, so any money you put into your pension scheme, you can get tax relief based on that. If you employ people, you offer salary sacrifice schemes such as employees' childcare costs. What that does, it benefits your employees, and also it enables you to reduce how much tax you pay as well. Another common way people pay more tax than they should is choosing the wrong VAT schemes. There's about 5 different VAT schemes, and it's important that you have a look. And if you're paying VAT, then we'll come on to whether you need to pay VAT shortly. It's important that you pick the right scheme that's suitable for your business and is going to enable you to ideally reduce your tax liability legitimately. If you have the opportunity to employ family, it's always worth doing that. It's a good way to reduce your tax liability by getting family members to work for the business and paying them accordingly. Another thing is to pay yourself efficiently. So for a limited company, we generally say you want to pay yourself up to the personal allowance threshold, which comes to £11,000. Any additional earnings after that, you want to take that by dividend, because dividend, the effective tax rate on a dividend is 20% corporation tax plus 7.5% up to the basic rate threshold. If you take that money as a salary, you'll pay 20% income tax plus 12% national insurance plus employers' national insurance as well. And also if you are investing in assets for your business, you may be able to utilise your annual investment allowance. So that gives you tax release on investing in assets that are going to generate long-term benefits for your business. There's also a marriage allowance as well. So if you are married and your partner does not work, you can in effect use part of their tax-free allowance as well. So that can generate thousands of pounds savings per year. Just going on to VAT quickly. If your taxable turnover is more than £83,000, you have to register for VAT. So once you register for VAT, you have an obligation to charge VAT, pay VAT when it's due to HMRC, submit VAT returns, and then maintain good records for your business. You can also claim back VAT prior to the date of registration on some goods and services. So any assets that you hold, you can claim back 4 years, and any services you incurred within 6 months of registering for VAT, you can claim back the VAT on those as well. So that's if your taxable turnover is over 83,000. You can deregister for VAT if your taxable turnover drops below 81,000. I'm from Integrity Accountancy Services. We offer a free 1 hour obligation, 1 hour no obligation consultation where we'll advise you open and honest in anything that would benefit your business. So if that's something you're interested, we can have those meetings in person, at your business premises, or over Skype. Just feel free to get in touch with us. If you sign up with us before the end of November, we'll give you a 15% reduction on your accountancy fees. Also, we are today doing a free prize draw, so if you drop your cards into the bowl outside, there's a chance of winning a bottle of bubbly or a nice big box of chocolates. So also another benefit of working with us, we will give you free QuickBooks accounting software for the first year of being with us. And we can provide our software much cheaper than you can go and get it yourself, because we have a great relationship with QuickBooks. Also, what makes us different to many accountants, we don't charge for telephone calls and meetings. For us, being in regular touch with our clients enables us to help them make their business more successful, and the more successful our clients are, the better it is for us ultimately as well. We want to work with successful people that want to grow their business. And please feel free to tweet if you found the session useful. Please feel free to tweet about us. Our Twitter handle is @IntegAccount. Thank you very much for all of your patience with that. I hope you found it useful. If anybody's got any questions, we're more than happy to answer any questions that come up.
All right, we're going to go offline for the questions. Thank you so much.
Thank